Welcome back to the Wall Street Podcast.
Great to be here.
Today, we're really digging into the key research and reporting from the Wall Street Journal's weekend edition. That was August 31, 2025.
Right.
Our mission, as always, is to pull out those crucial insights on corporate strategy shifts, technology's impact, which is always evolving, and regulatory changes that are shaping the markets.
And our economic reality, really, it's a fast-moving picture.
Absolutely. So let's start with that first big theme, corporate strategic realignment. We're seeing some, well, pretty significant moves.
Definitely. Kraft Heinz, for example. They're apparently close to a plan to break up the company.
Which basically undoes a lot of that 2015 merger, doesn't it?
Exactly. They might spin off a huge grocery business, maybe worth $20 billion.
Leaving the other part focused just on things like Heinz ketchup and sauces.
It points to that trend of specialization,
Yeah.
Focusing down to unlock value, more agility.
Makes sense. And then there's Spirit Airlines. Filed for bankruptcy again, second time in a year.
Yeah, but this seems like more than just financial trouble. It sounds like a strategic reset.
Trying to appeal to higher-end consumers, moving away from purely ultra-low cost.
Possibly. And it opens the door again for talks about merging with Frontier. The pressure in that sector is just immense.
And quickly, PepsiCo and Celsius. PepsiCo is putting another, $585 million into Celsius?
Right. Boosting their stake, expanding the partnership, and Celsius itself is buying Rockstar Energy.
So aggressive moves in that energy drink space.
Yeah.
Consolidation and grabbing market share.
Total power plays in a really hot market, securing dominance.
Okay, let's shift to our second theme, the double-edged sword of AI. We thought it might get cheaper, but
Well, yeah, the journal's reporting suggests the opposite, actually. AI is getting more expensive.
developers are finding costs for the advanced models are higher than they thought.
That's right. The price per token, basically a unit of processing, it's really jumping for the complex stuff. OpenAI's GPT-5 costs way more than its simpler versions.
That's a barrier then, especially for smaller players trying to use cutting-edge AI.
It is a significant barrier. The compute power needed is just enormous.
And then there's the human impact side. The Journal had that really disturbing investigation.
The one about the man whose delusions were seemingly fueled by an AI chatbot?
Yes, leading to a murder-suicide. It's tragic. Shows the risks.
Absolutely highlights the ethical tightrope and the need for safeguards. OpenAI apparently made changes to make its AI less agreeable or sycophantic.
But it's not all negative, of course. AI has huge positive potential, too.
Definitely. Look at healthcare. Microsoft's diagnostic orchestrator showed 85% accuracy in some case studies. That's impressive.
And even in social connection, a Bumble co-founder is working on an AI matchmaking app.
Right, aiming for deeper user understanding, better matches. It shows AI's power in analysis and personalization. If we manage the risks, it could revolutionize things.
Okay, final theme. Shifting regulatory and workforce dynamics. First up, tariffs. The administration ended that de minimis exemption.
Yeah, the $800 duty-free threshold is gone for all nations now.
So what's the immediate business reaction? How are they adapting?
We're seeing a massive surge in demand for foreign trade zones, FTZs. E-commerce brands are using them to defer tariffs.
So they can bring goods in, hold them in the zone, and only pay duties weekly on what actually ships out to customers.
Exactly. It helps manage the immediate cash flow hit from the new tariffs.
Interesting. And inside companies, there's a big shift, too. Fewer middle managers.
That's a major trend. The average manager-to-employee ratio has widened dramatically. It was maybe 1 to 5 back in 2017.
And now it's closer to 1 to 15.
Roughly, yeah. By 2023. That means companies want more self-starters, and the managers who remain have much broader responsibilities, more pressure.
It points to flatter, maybe more agile structures, but it definitely puts more load on individuals.
It does. And alongside that, leaders seem to be taking a firmer line on employee activism disrupting work.
We saw examples like Microsoft firing protesters, Google and Salesforce limiting political chat.
It signals a shift, maybe a reprioritization towards productivity and, well, neutrality in the workplace, especially in this competitive market.
Okay, let's dive a bit deeper with our commentary segments. First question, how are businesses really adapting their import strategies now that the de minimis rule is gone?
Well, as we touched on, the key adaptation is that strategic pivot towards foreign trade zones. It's about mitigating the immediate financial burden. By deferring tariffs until goods leave the zone and filing weekly only on shipped items, they can manage costs and logistics more effectively under the new rules. It's a significant operational shift for many importers, especially in e-commerce.
Right, makes sense. Second question, AI's contrasting implications. How do we reconcile its potential for good, like in healthcare, with the risks, like that chatbot tragedy, and the rising costs?
It's this inherent duality, isn't it? On one hand, you have amazing progress diagnostics, personalized services like matchmaking, real breakthroughs. But on the other, you have these profound risks to well-being, highlighted by that tragic case. It demands extremely careful development, strong ethical oversight, and then the cost factor. It could genuinely limit who gets to benefit from the most advanced AI, potentially widening an innovation gap.
So access versus risk versus benefit, a complex balance. Okay, third question. This corporate delayering, fewer managers, plus the tougher stance on activism, what does this tell us about the future of work?
It points toward leaner organizations, definitely. Ones that demand higher individual performance and autonomy. That 1 to 15 ratio is proof of that. It suggests a structure built for speed and efficiency. At the same time, the stricter approach to activism indicates employers are drawing clearer boundaries, perhaps prioritizing operational focus and minimizing internal disruptions. It's reshaping the employer-employee dynamic, emphasizing performance and alignment with company goals.
So these aren't just abstract trends. They have direct consequences for you listening.
Absolutely. Changes in tariffs and how companies use things like FTZs could eventually impact consumer prices.
And the shifts in management structure, the expectations at work that changes career paths, daily work life.
And AI. Its growing role in everything from your health information to maybe even finding a partner, alongside those real risks we discussed. It's becoming deeply woven into our lives.
So as companies grapple with all this policy, tech, people management, maybe the final thought is this. How do these rapid changes challenge our own assumptions about what makes a company efficient, how we interact, and what the modern workplace, even modern enterprise, really looks like going forward?